You just be keeping my mail, huh? What's doing?
My video.
You're not going to that school doing it.
All right, guys, we are being live streamed right now.
Stop, stand up. Just be keeping my mail.
I'm gonna hold on just a second. If everyone could just go ahead and mute themselves, we're gonna get this party started. Can everyone see me okay? Just one person. Adam, can you see me all right?
Yes.
All right, perfect. So, welcome. This video is being recorded on YouTube, so I welcome as much participation as you guys want to participate in. My name is Mike Rudkowski. I'm the owner of Signature Signings. I've been doing this business now for 22 years. I started in 2001, and it's been a bumpy road. We have our ups, we have our downs. Believe you me, I've been through it all. I've seen it all. I've experienced a lot. I can't say that I know everything. I'll never say that. I know quite a bit. And even when I thought I knew everything, I was humbled very quickly through some experiences. So keep an open mind today as you're learning. Maybe everything I talk about you've already heard of before, but you never know when you're going to catch one little piece of information that may change your perspective, maybe change the way you're doing things running your business. So I just want to welcome you all for being here. May is Mental Health Month. And, you guys have tuned in before, you know that I'm a huge advocate for mindset. I keep it right here on my wall. Mindset is everything. We're all just little goldfish trying to be sharks in this great big ocean of ours. We've got tons of competition being each other, but I also like to think of it as allies. We all are trying for the same goal, and that's to create opportunity for ourselves. And if you get really good at it, like I was, when the market was really strong, I created so much opportunity for myself that I could not possibly handle all of it. And it became one of my strengths, because then I was able to share that information with other signing, or with those opportunities with other signing agents like yourselves. So that's how Signature Signings came about. We're a nationwide mobile notary and loan signing service. You can visit our website at signaturesignings.com and sign up with our signing service by selecting option 5 through the drop-down menu and become part of our network. And really, it's about creating and sharing opportunity. I want to try and get you guys paid as much money as I possibly can. And I also want to encourage you to create opportunity and share it with our network as well. And in doing so, Signature Signings is able to pay you $20 for every signing opportunity that you're not able to perform, or maybe your clients have signings that are out of your jurisdiction, out of your area, that you can get your clients to refer through Signature Signings. And we can pay you $20 for every signing order that comes through your clients. And we'll never solicit your clients. You can actually set up your own nationwide signing service using our brand. If that's something you're interested in, reach out to me. Mike at signaturesignings.com is my email. You can also call me direct, 1-866-SIG-SIGN 744-7446, extension 700, or just go to our website, and at the very bottom of the website is a contact us form, and just reach out to me and I'll get back to you as soon as I can, and we can have a personal one-on-one discussion. But as I was talking about, May is Mental Health Month. I want to share my screen here really quick, because if you guys log into signaturesignings.com, up here in the top right corner where it says notary login, that's where you'll go to create your account if you haven't created one already. And once you log in, it's going to take you to the members area, and on the left hand side of the screen. And if you're doing this from your phone, you need to turn your screen sideways in order to get this little sidebar here. And we've got the vetting quiz area, the membership area. It talks about our future events and our calendar. Got some workshops that we've posted previously, like this one on the site. but we also have Rachel's Corner. And Rachel is a personal friend of mine who's a licensed marriage family therapist. And she focuses on helping people create the right mindset, not just in personal, but in business. And it's a fine balance between the two. So she's put some resources here on our page that you guys can use to get your morning started, some meditation videos that she likes to use every now and then and share with her clients. She also has her contact information here. She's always available if you want to meet up with her via Zoom and schedule her for a personal meeting. Trust me, guys, like I said, mindset's everything in my opinion. We all have our ups and downs, especially when things are slow right now. It's discouraging, and it may create a lot of outside pressure on us with our families and our friends and just our own self-worth, if you will. You know, I know going from as busy as we all were, and now things are just not the way they were. You know, funds are low, and it can may bring down a little bit of your self-worth down. And I know what that's like. We all go through it. I want you to know that you're not the only person feeling that way if you are feeling that way. I'm here to help support you, motivate you, give you inspiration and tools that you can use to better your business. Because in the long run, the goal is for us all to come together and be as productive as we can, and then share that amount of over opportunity with each other, so that we can all live a happy, successful business life on the notary side of it all. So check that out. Let's see here. What else do I got? I'm going to be hosting a class. If you're in the Sacramento area, or if you're up for coming out for a full day's training in Sacramento on, I believe it's Saturday, May 27th or 28th, whichever day that is, in Lincoln, California, I'm going to be hosting a full day's training. Literally everything I know from A to Z. We're going to be talking about the understanding of escrow documents, loan documents, purchase, refinance, seller documents. We're going to be going over all of that and all the little tips and tricks that I've learned throughout the years to build a successful six-figure signing business. So if you can go on our website, click on the link, sign up for that, and be here in Sacramento. There's Thunder Valley Casino, which is literally maybe 2 miles away from where I'll be having the class at. So you can get a hotel room there if you need to. There's also plenty of other smaller hotels if you're not in the area, but sign up for that. Otherwise, I just want to get in today's training. We're not going to have Rachel or Robin with us today. So let me share my screen here. Give me just a second. I'm still learning. I say that every time. I'm still learning Zoom. All right, let me see here. I'm going to stop that. And I want to share my other screen. All right. There we go. So this right here is a settlement statement for the purchase of my own personal home several years ago with my ex-wife, Tara, and I have her permission to show this information. None of it's really consistent anymore. But if you tuned in last week, I went over how to kind of explain a seller statement and a buyer statement. This is a purchase statement for my ex-wife and I, and we purchased a home for $393,105. There's 3 pages to the settlement statement. And if we go to this portion, we talked about how the lender collects money up front for impounds, and that's for the taxes and insurance. And we also talked about what an aggregated adjustment is. And if you're not familiar with that, or you didn't tune in last week, I'm going to help you just understand this and how it all pertains to understanding the whole picture of loan documents. So in this case, our lender collected 3 months worth of homeowners insurance, and they also collected 6 months worth of property taxes. And if you recall, the aggregate adjustment is the financial or the federal guideline that says that no lender is allowed to collect more than the amounts that's calculated through their formula. And if you want to know exactly what that formula is, you can go just type in aggregate adjustment somewhere on your search engine and it'll break it down for you detail for detail. I never get into that much detail with my clients. I wouldn't expect you to get into that much detail, but if the question ever arises, I want you guys to be able to at least give a fair Cliff Notes version of what an aggregate adjustment is, because it personally happened to me. And I was like, I don't know. And I had to call my escrow officer at 8 o'clock at night. And, she wasn't happy. She's trying to put her daughter to bed. And I couldn't answer this question for this guy. And it led me to want to learn more about this stuff so that I don't have to put my clients out while they're trying to enjoy their evenings. That's why they hire us as professionals, so that they don't have to worry about that kind of stuff. And that's what's going to help you go a long way, is getting a full comprehension of this stuff, even though you wouldn't need to explain it all every time you're at a signing. If a client has a question, you know the answer to it. So if you do the math, we got $179.76, and then 6 months of taxes, $24.56.68. And then they calculate that number, they run it through their formula, and it looks like, oops, they collected $179.76 too much. So they put that on the settlement statement as a credit as opposed to a debit. Now, it's just a coincidence that these two numbers match, okay? Usually they do not match. But in this case, with the formula and the amount they collected, coincidentally, the numbers match. So I'm going to race down here to page 45, I believe it is. And we're going to talk about the closing disclosure really quick. Whoops. Here we go. So on the closing disclosure, it has our loan amount, it has our interest rate, it has our monthly principal and interest. No, there's no prepayment penalty, there's no balloon payments. It shows that the principal and interest payment is locked in for 30 years. It also shows the mortgage insurance is locked in for 30 years, and that the estimated escrow account $469.40 is locked in for 30 years. Now that's obviously going to change, but these two are locked in forever on this type of loan. This is an FHA loan. That's typically the type of loan where you only need to come in with 3.5% down as opposed to 20% down. But because of that, the lender requires you to pay mortgage insurance, which a lot of people, if you don't know, automatically think that this is the cost of your homeowner's insurance, but it's not. These mortgage insurance is typical for FHA loans or HUD loans because you're not coming in with 20%, which makes the lender a little bit wary about wanting to lend you as much money as they are. So they charge you this mortgage insurance, which protects the lender in the event that you were to default on the loan, because it's very easy as a borrower with only putting 3.5% down on a $400,000 home. If you were to lose your job or things went south financially, for you to just easily walk away and not suffer too much of a financial repercussion, if you will. Where if you were a borrower and you put 20% down, you've got some skin in the game. You've got something to really lose if you stop making the payments on your property. So that's what the mortgage insurance does. It protects the lender in the event that you were to default on the loan. And then the estimated escrow, this is what your estimated monthly taxes and homeowners insurance come out to. If you were to go back to the settlement page, it said that it had collected 3 months worth of homeowners insurance, I believe. If you were to take that amount and divide it by 3, and then multiply that by 12, that would be the annual insurance premium. Same thing with the taxes. If you were to take that amount, I think it said it collected 6 months worth. So if you took that dollar amount, divided by 6, and then multiplied it by 12, that would be your annual tax bill. Now, your tax insurance can fluctuate a little bit depending on the federal government and your insurance carrier, which is why I said this 469.40 here, that is not locked in for 30 years. But having an escrow account in your loan is, in my opinion, probably one of the best things you could do, unless you just have a ton of money sitting in your bank. It's one thing less to worry about as a borrower, to have to make those tax payments and those homeowner insurance payments. So I like having an escrow account in my personal loan, and it shows the total monthly balance here. Now, I didn't come here to really get into all of this too much with you guys. We'll save that for another day, but I wanted you to see what the mortgage insurance and the estimated escrow account is, because now we're going to skip down to page 77 here to what's called the initial escrow account disclosure statement. Okay, so if you look here on this estimated disclosure statement for the impound escrow account, and those two terms are used pretty loosely. Escrow account, impound account mean the same thing. You're going to see it on this document as impound or escrow account, but a lot of people may refer to it as an escrow account as well. So, hey, Melissa, welcome.
Hi, something happened. I don't know.
No worries. I'm going to go ahead and mute you.
Thank
I just
you.
wanted to welcome you to the meeting here.
Thank you.
All right. So if you look here, it says initial deposit right here. And if you look off to the right, escrow account balance starts at $2,456.88. I don't know why that just highlighted like that. But never mind the highlight there. But escrow account balance starts out at $2,456.88. If you were to revert back to that page that we looked at, the estimated buyer statement at the very beginning, if you were to do the math, the 3 months plus the 6 months minus the aggregate adjustment, it would equal $2,456.88. Okay, so that's how much money is going to start out in this escrow account for us. And if you look to the payments to escrow account each month, and it's like clockwork every month for the whole term of the loan, $736.04 is how much is being deposited in that account. If you guys were to go back to the closing disclosure, the first page, and you were to add up the mortgage insurance and the escrow account balance per month, which is the taxes and insurance, it would equal $736.04. Okay. Now we already talked about the mortgage insurance was $266.64. So every month you make your payment, whatever that total payment was, I think it was $2,400 something. $736.04 of that total monthly payment is going to get put into this account called the escrow account. And right off the top, the mortgage insurance is going to come out of that, the $266.64. So if you were to take the difference of $266.64 from the total amount deposited for that month, the difference is going to get saved over here. And now we've got a higher balance than we started out with. Okay, $2,926.28. Oh, it looks like February though, our property taxes are due and our mortgage insurance. So this is the great thing about having an escrow account is the buyer or the borrower does not have to worry about making these large property tax payments. In this case, over $2,700. I'll tell you guys what, when I first bought my first property several years ago, it was a condo. I had a financial planning background. I was like, I am not going to let somebody hold on to my money. I can hold on to it for myself, and then I'll make my tax payments. And I'll tell you what, when the time came to make my tax payments, I was like, oh crap, I didn't save the money because I was too busy buying things and just wasn't really paying attention. I didn't know when the tax bills were due. And obviously I wasn't a very good financial advisor, which is why I'm no longer in the business. But having said that, this is why I like to keep an escrow account, and why most people prefer to keep an escrow account, because they know that the money is already saved in this account, and they know that their taxes are going to get paid, and their mortgage and their homeowner's insurance. It says hazard insurance, or it's abbreviated hazard insurance down here for November 18th. With the property taxes, the hazard insurance, and the mortgage insurance all coming out that month, the total is $3,442.56. So at the end of the year, after 12 months have passed, your taxes are paid 2 times a year, your homeowner's insurance is paid annually, and you pretty much start right back where you started at, $2456.88, $2456.88. This account never went below $938.80. And that's the magic of having an escrow account, so that you don't have to ever worry about, or your clients don't ever have to worry about paying these large dollar amounts. Now, a lot of people may forget this or may not understand, but this escrow account is only good for as long as you have the loan. So if the client were to ever refinance out of this loan, or if they were to ever sell the house, whatever money is sitting in this account is going to come back to them. Okay, this is their money. It's not the bank, it's not the lenders, it's not the realtors. This is your money. You can never actually withdraw any money out of this. You can't say, you know what, me and the girls are going to hit the club tonight. We want to take some money out of here so we can go get some drinks and party. No, there's no ATM linked to this or bank account where you can pull money out. This is strictly just for your insurance and your taxes. So make sure your clients are aware that
What is that?
that this money is just for their taxes and their insurance in the impound account. So that's pretty much the basics of what an escrow or impound account. Does anybody have any questions or concerns? That is something that maybe I didn't quite go over in clearly enough for anyone. And don't be shy, we're all learning here. So somebody may have the question and just too shy to ask, but we're all learning from each other here. So everyone shoot. Anyone? No? All right. Well, today we're keeping it pretty short then. I just want to give you a quick little tutorial about understanding where the escrow account comes from, how it works in conjunction with the settlement statement and the closing disclosure. Those are pretty much the 3 main things I like to show the clients for their total monthly payment, with the exception of the note and the deed of trust. Everything else is just disclosure, blah, blah, blah. And we'll go over that stuff in a future meeting. But again, if you haven't signed up to become a member of Signature Signings yet, you can visit us at www.signaturesignings.com and select option 5. And let me see if I can share that screen one more time, just for those of you that, where is it at?
I have a quick question.
Please.
Is there a point in time, which I think I have heard it, there is, where the mortgage insurance, they can stop the mortgage insurance from being taken out?
Most definitely, most definitely. In the scenario I was just showing you, that is an FHA loan, which means that they are stuck with the mortgage insurance for as long as they have that loan. But there are conventional loans where the mortgage insurance is only temporary, and you'll see it on the closing disclosure. It'll have two columns, if you will. It'll typically say like 1 through 8, where it'll show the mortgage insurance amount, and then it'll show 9 through 30 in the second column, where it does not have the mortgage insurance. And so typically what that means is that the lender is not going to keep the mortgage insurance on the loan any longer than 8 years. But if the borrower can prove to the lender prior to the end of that 8-year mark that they have a vested interest of their property of 20% or more, the lender may require them to get an appraisal to show that they do, but once that appraisal shows that they have a vested interest of 20% or more, then they will drop that PMI or mortgage insurance off their total monthly payment. And I've also heard lenders just drop it off altogether. You know, as home prices continue to go up, and especially if you're paying more towards your principal each month, that gives you more of a vested interest every time you're making a payment. And so if your principal or your loan amount's going down and the homing prices are going up, the value of the property could definitely make that PMI drop off a lot sooner than not. But like I said, if it's an FHA loan, you're paying that PMI for the entire term of the loan. And the only way to get rid of that PMI is to refinance out of that loan into a conventional loan, putting down 20%. So that,
All right. Thank you.
you're welcome. Anybody else have a question? All right. Well, then I welcome you guys to please join our network, Signature Signings. We're all here to create and share opportunity and motivate and inspire each other. I want to thank you all for being here and part of this today. Like I said, we're keeping it pretty short. Just want to give you guys a little tidbit each month. I've been having a lot of success lately because the escrow officers have been pretty slow with going into realtors' offices and asking them when their weekly or monthly meetings are, and going in and sponsoring those. And, you know, every realtor in there is probably, you know, closing a deal here and there. Just in the last month or so, I've probably done about 6-7 signings for realtors that I've been marketing to because they were closing and they didn't have a personal relationship with a signing agent. So I always like to go in there and I'll just like, hey guys, my name is Mike Rutkowski. I'm the owner of Signature Signings. We're a nationwide mobile notary and loan signing service. And what a lot of you realtors and lenders may not know is that you have a choice in who represents you at your closing. It's so important for you to have a relationship with your lenders, with your title and escrow, with your handymen, your pool guys, your plumbers, your electricians, and everybody else that you have as part of your team as a realtor, but nobody has a relationship with a signing agent. Don't you think it would be important to have a professional representing you at your closing that you have a personal relationship with so that you can be communicated to and communicate with during that process if your clients have any questions or concerns, especially if you're not able to attend the signing? So that's how I kind of gained their confidence, by marketing to them directly and just saying, I want to be part of your team. You have all these other people on your team. Why don't you have a signing agent? And then the realtor, you just let them know, hey, when you're ready to close escrow, you just let your escrow officer know that you have a preferred signing agent. In this case, Mike Rutkowski with Signature Signings. I tell my real estate officer or real estate agents to put me on a joint email with the escrow officer and introduce me, and I'll take it from there. I'll show the escrow officer that I'm already approved with their signing or with their title and escrow company. And if you're come across a situation like that and you're not approved with that title or escrow company, Signature Signings most likely is. If not, we can get you approved through our signing service with that title company. A lot of title companies require you to have 2 years minimum experience or have $1 million of E&O insurance. So if you're not able to provide that type of qualification to the escrow officer, you're welcome to send that opportunity to Signature Signings, and you can run that opportunity through our signing service because we've met those qualifications for you. And then we charge a $50 transaction fee for that, but that still allows you to keep that transaction. So if you're charging $175, $200 to the title and escrow company for that signing, the check comes to us. We cut you a check for the fee minus the $50, which in that case would be $125, $150. which is still a hell of a lot more than you would have gotten if you didn't have the qualifications to work for that realtor through their title company. So you can always use us as a liaison to facilitate those transactions when you don't have those qualifications as well. So remember that. And I think that's about it for today. So guys, please reach out to me if you have any questions or concerns. I'm here to help. I've got a lot of time on my hands right now since things aren't as busy as they were. And I want to help all of us just become as productive as possible. So when things flip the switch, and I know they will, it's just a matter of time. It's not a matter of if, it's a matter of when. We can all be as productive as we possibly can and take those overage of opportunities and share them with each other. So y'all have a great day, and I'll look forward to seeing you next week. Take care. Bye.
Bye, thank you.